welcome back to an NLT Bootcamp video. We are 2 videos away, this one, the next one, and then we're going to get into the strategy chapters, which is going to be great because Monday is when we're going to be trading for the first time. We're going to be recording that as well, and you guys are going to see, dude, I'm the only bootcamp that you guys know. Fuck all your other teachers. I'm just joking because they're dope as fuck, but fuck them. Because none of your teachers are doing what I'm doing. So this bootcamp, if you guys don't know, is going to be insane. It's the most unique bootcamp that is on YouTube. I'm teaching 2 new people as a bootcamp that you guys can watch on YouTube as a bootcamp, which is dope. You're watching a bootcamp of a bootcamp. But this bootcamp is not going to be finished when we're done with the chapters. We're going to be continuing the bootcamp all the way until Nick and Victor get a payout. So you're going to see 2 new people start all the way from introduction, like learning terminology, all the way to demo trading, and then from demo trading to prop firms to getting payouts, and then even live trading. So this bootcamp is going to be insane. It's going to be dope. It's super unique. You guys are on the fly on the wall. You guys get to learn, follow in their process, and see how new people, progress. And it also gives me a little bit of credibility, because it will show you guys that I'm a good teacher. And yeah. Here we go. We're on chapter 14. Oh, remember to like, subscribe, and then turn on your post notifications if you haven't already. Ask some questions in the comments so that way it can help Nick and Victor when we answer them. And then Nick and Victor are also going to ask questions that can help you guys when I answer them. And here we go. Chapter 14. You guys have been bombarding me about this chapter for a long time. It's what I posted this video on TikTok in, I think, September. And since then, you guys have been asking me to do a video on this. So here you go. How to read candlesticks. You're going to learn what a candlestick actually is, why the bodies matter more than the wicks, what the wicks tell you, bullish versus bearish candlesticks, strong versus weak candles, indecision candles. You're going to learn context and also a fair value gap and a breakaway gap, because a lot of people think there's only a fair value gap, but there are also breakaway gaps. Okay, here we go. What is a candlestick actually? Each candle shows you the price over time. So a candle has 4 price points: open, the high, the low, and the close. A candle is a summary of what happened during that time period. So when you're looking at the candle, sorry, I had a brain fart. So when you're looking at the candle, you're going to see the high, the open, the low, and then the close, right? Yeah. Open right here. No lies. It's a red candle. So open right here. No, yeah, right. I'm right. So open right here, close down here, the highest point and the lowest point, which this wasn't really a lowest point because there's a baby wick. And then each candle shows you what happened in that time period. So depending on the candle time frame, this candle by itself is 1 hour. So in 1 hour, this candle will show you exactly what happened in this 1 hour. We went over this briefly in the last the previous chapter. So now we're going to go super in depth with this, and you guys are going to learn how to read candlesticks so that way you guys can close out of trades properly, place proper stop losses, and know if your targets are actual targets, or if you're watching the chart and it's going towards your target. If it's losing volume, you can know, like, okay, let me just close out now because I don't think it's going to touch that target. So these are very good. This is very good to know. Your trading requires 3 things: market structure, candlestick reading, and then your entry. So if you have those 3, you know how to trade. Because if you don't have all 3 of those, no, sorry, not your entry. Yeah, your entry. Your entry model. Sorry, there you go. So unless you have all those 3, you do not have a strategy. So you only have one of each thing. So like all you guys that are trading ICT, you guys do not have strategies. You guys have only entry models. Like you guys don't know how to read market structure. You can't read Candlesticks. You only know how to get into the market, but you don't know when to get into the market. So this is going to be very good for you guys. This boot camp is very good for you guys. So here we go. Yeah. You guys good on this?
Yep. Yeah.
The body is the most important part. Body equals distance between open and close. Large body equals strong control. Small body equals indecision and loss of volume. So, big body bends. It's the distance between the open and the close. So this is the body. The solid part is the distance between the high and the low. So right here, the distance between the open and the close. Sorry, so open and the close. That is the candle body. The body means more than the wicks. Small bodies equal indecision. So this is I don't know where I'm going. Let me figure it out. This means we're going down. This means we're going up. This means I don't know where we're going. This means we're going up. Let me know when you guys are ready.
Ready. Go ahead.
Wicks. Wicks show rejection. A long wick equals price tried and failed can be used to identify liquidity sweeps. We're going to be going over liquidity sweeps in the next chapter. So you don't have to really worry about that. If you guys know what liquidity sweeps are already, then you're good. So long wick equals price tried to go there, but it failed. It got pushed back. Upper wick, sellers rejected higher prices. Lower wicks, buyers rejected lower prices. So super long wick, price tried to go back up, but it failed. Super long wick, price tried to go up, but it failed. Super long wick going down, price tried to go down, but it failed instead, and it went up. Same thing. Price tried to go down, but it failed and went up. Remember, the color of the candle does not matter. The actual reading of where the candle is and the body placement is what matters. So like this could be, even though this candle is red, this doesn't tell you that sellers are in control, because we have a big candle wick going down and a small candle wick going up. So sellers won this auction, this candle, but not by a lot. Buyers were also very strong in this candle. So that tells you there is slight indecision in this candle because we have big wick going up, big wick going down. So this is a big indecision candle. You want to see small wicks, big bodies when it comes to strong conviction in where you're going. So for example, right here, big body, small wick, small wick. Strong buyer volume. Same thing right here. Small wick, big body, small wick. Strong seller volume. This right here, small wick, big body. This is actually kind of in the middle. So this would be slightly an indecision candle, but this is a balanced candle, but buyers won this one. So with this one, I would be very careful at this area because we are also approaching an area of support, a resistance at this level, which is why this was probably a indecision candle. Because price is telling you it wants to break out, but buyers and sellers were balanced. And then you see right here, this is the confirmation candle that would tell you like, hey, we're actually going up. So if you were to enter trade here, you have to wait for this candle instead of this one. Because this one, it rejected big on the bottom. Small wick up top means it tried to go high, failed slightly. Buyers won this and won good, because the body is at the top of the wick, top of the closure, and big ass wick on the bottom. So that means sellers tried to push from this resistance level and failed.
Is that a candle called a hammer candle?
I don't know. I don't know the names of candles.
Okay.
The names aren't
There are a
really.
couple.
Yeah, the names aren't really important, unless it's
There are a
like
couple.
you just have
Sure.
all you have to know is like indecision or strong. So like small bodies equal indecision, and loss of volume, and then big candles mean strong volume, strong conviction. I mean, you could, if it's called a handle candle, then you could call it that, but I have no clue what it's called. I just, I just know what it
Oh,
means.
I just heard a couple people using the term. That's all. I don't know if it's what that meant.
Yeah, me either. I just know how to read it. I only know what the small ones are called. The small ones are called dojis.
Dojis?
Yeah, doji candles. Or you can call it an indecision candle.
Right.
Let me know when you guys are ready.
I'm good. I'm good, bro.
Bullish versus bearish candles. Bullish is a close higher than the open. Bearish is a close lower than the open. So, color doesn't matter. Body closure matters. So, like I said right here, this had a big wick on the bottom, but it closed on top of the overall move. So that tells you that this is a bullish candle, right? Let's say, for example, right here. This right here, it's a small body, but it kind of gives you the idea. Big wick on top, body on the bottom. This is technically a bearish candle, but even though it's green. So remember, the color does not matter. It's the placement of the body that matters. That tells you the real story. So this is an indecision candle. Wick, wick, body in the middle. Wick, body on the bottom. Seller candle. Indecision candle, kinda. Indecision candle. This is a bullish, this is a bearish candle because body is on the bottom instead of the top. This is technically a bullish candle because the body rejected lower prices and closed higher, but it's red. But this is still a bullish candle. This is a bearish candle, even though it's green. This is a bullish candle, even though it's red. So remember, body closure matters more than the color. Which is why you guys, when you guys were looking at my TikTok, you guys saw that I had all black candles. Because the color doesn't really matter. Once you understand how to read candles, you don't really need the colors.
I see.
But unless like you get still confused on like swing highs and swing lows, it's good to have the colors because then you can see where like it actually is. You know what I mean? But once you get used to it, you could technically use any color you want.
Nice. I'm ready, bro.
Almost done. Just one more check. Okay.
Strong versus weak. So a strong candle, large body, small wicks, closes near the high or the low. So that would be this. This is a strong candle. Closes near the high, closes near the low. Weak candle is small body, long wicks, closes in the middle. So that would be this. Long wicks top, long wick bottom, closes in the middle. Long wick top, long wick bottom, closes in the middle. These are weak candles.
Good.
Good, Victor?
Yeah. Good.
Indecision candlesticks, same as a weak candlestick. Small body, long wicks, buyers and sellers are balanced. So when the body closes in the middle, buyers and sellers are balanced. These candles tell you to wait for more information and do not indicate reversals, because a lot of people think that these indecision candles tell you that a reversal is coming, but it's not true. It just tells you to chill. It tells you to chill and don't jump into the market, because a lot of people jump into the market. They're like, oh, I see a lot of small candles. You know what I mean? A lot of indecision. That means we're gonna reverse. In reality, the market just doesn't know what it's doing. So if it doesn't know what it's doing, so how do you know what you're doing? You know what I mean? So all that tells you is to just wait, sit on your hands, slap yourself if you have to. Don't do anything. And just wait for more information. So for example, like these right here, all these small candlesticks right here, this doesn't tell you that a reversal is happening, even though a reversal didn't happen actually. So like right here, people would think like, oh, we're losing volume, that means I'm gonna get ready to sell, right? But there's no confirmation that you're gonna sell. This is just the market losing volume, and like, I don't know what's going on.
Break. Yeah. Good.
I'm ready too.
Context. Understand that candles do not mean anything by themselves, so you have to always understand support, resistance. Are they in trend? Are they in ranges? Like, market structure matters when you're looking at candlesticks. You can't just read candlesticks and be like, oh, I know what I'm doing. You have to add them with everything else. So like I said before, unless you have market structure, candle reading, and an entry model, you do not have a strategy. You only have one piece of the whole pie. So context. You have to ask yourself these questions. Like, where are they located? Am I close to a resistance? Am I close to a support? Are they going with the trend? Are they going opposite of the trend? Like, is this a primary trend or is this a secondary trend? The secondary trend, you guys should know what that is. It's the pullbacks. So should I take a pullback trade? No, you should not, because it's a risky trade. It's going in the opposite direction of the trend. You know what I mean? So you have to be aware of these things. Damn, I want some soda, but I'm trying to stay away from soda. Like, I'm craving like a Coke right now.
When I stopped drinking soda, like my body felt way healthier.
Yeah, that's what I'm trying to do. I've been drinking a diet though, or sugar free.
Isn't that worse?
No, it's not worse. It's a myth.
Oh.
Because I was watching, I thought it was worse too, and then I saw a video of somebody who was a scientist that broke it down, and he was like, you need to drink 100,000 cans of diet soda in order for it to even affect you just a little bit. So it really doesn't matter.
Like the level of aspartame and everything.
Yeah, you would need like 100,000 cans of soda to get enough aspartame for you to get even a percentage of like getting in trouble.
There you go. Sounds like Mentos are much more dangerous.
Yeah, probably. But I think it still is bad for like women though who are pregnant. Like you shouldn't be drinking like zero sugar or diet stuff because it affects like some shit. But yeah, but for us normal people, you know, who don't have babies or aren't
Like
pregnant,
pounding Red Bulls and Monsters all day long.
yeah. So it's cool. You can drink those. You can drink diet. See, you're not learning just about trading. You're learning about how to drink soda too.
I'm good on that one.
Okay. This one is great. I love breaking this one down because this one's good.
I'll put this on a new page. Hold on.
Yeah, this is a lot. So, fair value gaps and breakaway gaps. A fair value gap tells you market wants to come back to retest this area. It has 3 candles. First candle forms, then the second one forms with momentum, and then the third one forms, leaving a gap between the first and the second. The third candle most of the time will close inside or around the same length as the wick of the second candle. The second candle must not contain any wicks. Not every fair value gap is a good one. Must be impulsive to be considered a good fair value gap that will hold a retest. So, for example, this. No, that's not a fair value gap. Hold up, let me find one. This is a fair value gap, right here. Let me change the color so you guys can see it. I'll go orange. What the heck? There you go. So, candle number 1, candle number 2. It leaves a gap in between. The third candle formed and leaves a gap in between. This is called the fair value gap. So when you're looking at the gap, it's right here. So when you draw it, you would go from this candle wick to this candle wick.
Okay.
That is your fair value gap. Hold on. That is a horrible way to draw it. So from here to here, that is your fair value gap. And then price likes to retest fair value gaps. So the next candle came down to touch this gap to go back up. It's basically a retest. So it will tell you these are where you should be entering. So these are entry models. So when you see 3 candles and then the candle body closed inside the wick of the second candle. You see it?
Yeah.
So this is considered a good fair value gap because you have strong momentum of the second candle. This candle can be, most of the time, it's going to either close inside this wick or it's going to be the same length as the wick.
Okay.
Or around the same length.
Mm-hmm.
But it needs to be that in order to be considered a good fair value gap. A lot of people, they trade fair value gaps and they don't even know what a real fair value gap is. Like this right here. This is a good fair value gap also. Candle 1, candle 2, big momentum. Candle 3 leaves a gap, closes inside the candle. Right? So this would tell you that this gap right here needs to be filled. Because sellers were too strong and took too much control that buyers want to retest to see if they can break back up. Right? So the next candle would be it retesting. All these candles technically are retesting. So it's like, boom, they tried to break through it, can't, tried to break through it, can't, tried to break through it, and then it dropped.
Yeah.
And then this candle was like, nah, we're going to test that shit again. Boom, big rejection.
And I got pushed immediately back down.
Yep. But if you're looking at it in terms of like a trade, technically this whole thing is a fair value gap. So it can be tested multiple times. So they tried to break above it so many times and it turned into a resistance also.
Mm-hmm. That's like, yeah, I was looking at that.
Yep. So this fair value gap was so strong that it created its own resistance. And then after that, they just gave up and just dipped down. Because this tells you that
Okay.
sellers are in control. When you see a fair value gap, that tells you like, hey, sellers might be control of this area because we had such a good momentous push or impulsive push that buyers are gonna try to come back up, right? Because that means there was so much imbalance. I mean, sellers won this candle so hard that the buyers were like, nah, we about to spin the block on you guys. Because we ain't about to go out like that. Are you serious? That's basically what it means.
That's basically what it means.
It's like, you gonna let him do that to you?
Right.
Okay, and then a breakaway gap. Oh, so fair value gaps happen anytime, right? There could be there are fair value gaps everywhere, but you remember you have to understand which is a good fair value gap and what is not. So the fair value gap must have momentum and must be in trend. And remember all the things I told you. 1 candle, 2 candle, big momentum. Candle must close either in like this or inside the wick or near the same length as the wick. If it doesn't do that, it is not a fair value gap. And then the next one. So honestly, these are not actually called fair value gaps, but people call them fair value gaps because of the ICT guy. So the ICT guy is the guy that I told you about that took a bunch of different strategies and put them all together and called it his own thing. And then he doesn't give you like the backstory to any of the other the strategies. He just puts it all together and tells you use all this. So this is technically not called a fair value gap, right? It's just buyers had more momentum than buyers had more control than sellers. That's all it is, right? So what a real fair value gap is just fair price, right? So for example, and the word isn't gap, it's just fair value. So if you were to look at the move for the whole day, like let's say we'll go to the 15-minute chart and we'll remove all this. So we go from the open. I'll use a Fibonacci because that's how you're supposed to do it. So 9:30 right here. So from 9:30 to the bottom of the whole move.
Oh, okay.
So the 50% mark is the fair value. So wherever price consolidates at is the fair value. So that is that's the best price for the day. That is what a fair value is. So the people saying like these 3 candle patterns are fair value gaps, they're technically right, but they're not right. That's just like buyers just want to come back to these areas, or sellers want to come back to these areas to gather more like, you know, contracts, or they're just testing it to be like, can we break past this? This is technically not a fair value, but this is the actual fair value. So the whole move for the day, if you look at where it consolidates, this is the fairest price that buyers and sellers were agreeing at.
Okay.
So it's just 50% of the overall move for the whole day. That's the fair value gap. Not the fair value gap, but the fair value. So like every day will always have a big move, and then it'll come back to the middle, and then it'll just consolidate. See? So like you see a big ass move, and then it just comes back up, and it just consolidates.
Yeah.
That's the fair value. But these idiots want to steal shit. Okay, and in a breakaway gap, market does not want to come back to test these areas. It is also a 3 candle pattern. Candles move with strong momentum, do not close inside the wicks, indicates a new trend and a strong trend acceleration. These only occur during market open, after news, and after consolidation. So these will be your breakouts.
Okay.
So for example, right here,
Yep.
this is your resistance, this is your support. 1, 2, 3. This is your breakaway gap. No, this is a lie. This is not a breakaway gap. Right here. Sorry. Right here is a breakaway gap. So 1, 2, 3. Breakaway gap. 9:30 open. Boom. So that's what we're going to be. We're going to be trading these. We're going to be trading breakaway gaps. Because this is where you get the most money. Well, for day trading. And it happens the quickest. Like, it's a super strong move. So, like, this candle breaking out right here could have taken, like, 10 seconds. Or less.
Yep.
Like, this,
Okay.
once it broke, I think I took a trade on here. Yeah, Wednesday, I did take a trade. This is the $1,000 trade I made. So, like,
Fuck
this,
yeah.
and it was, like, what? I think 13 seconds. So, this trade broke so hard, and there was so much seller volume that it was just like, I bet. Breakaway gaps. And there you go. That is how you read candles, guys. You're welcome. After telling you guys I was going to make the video for so long and didn't make it, now you guys get it. So you're welcome. I'm sorry I took so long. I was just very lazy to make it. This is going to help out a lot of people, though. Because once you know how to do this, and once you know how to read these candles, your trading, like, gets taken to the next level, dude. So once you add all three in, so, like, I gave you guys 2 of the 3. So I gave you guys the market structure, now you know how to read candlesticks. You're probably going to have to practice a little bit, but I'm pretty sure you guys get it, right? It's pretty easy.
Definitely have to practice, but everything, you know.
Yeah, small candles just mean no volume. Big candles mean we going. It's pretty easy. But yeah, you guys have 2 of the 3 now. And then in the next couple chapters, I'm going to be teaching you the 3rd part. So, like, you guys now know how to read a chart. You guys now know, all of you guys actually, Victor and Nick, and you guys watching on YouTube, you guys know 2 out of the 3 now. And you guys know the terminology. So you guys are now baby traders.
Nice.
Yeah, can't wait to get some trades in.
Yep, that's what we're gonna do on Monday. I'm excited. So I'm gonna have you guys, like, since you guys are gonna be paper trading, I'm gonna have you guys do the 30-day trial. You know, the free trial.
Okay. Yeah.
So by the time 30 days is up, you guys should be ready to go into prop firms. Because I don't want you guys to paper trade that long, because it creates bad habits. You know what I mean? But I want you guys to have the live data. Because when you don't pay for it, when you don't have the live data, it's delayed by 15 minutes.
Okay.
Okay.
Yeah, so you won't see exactly what's going on in the market. Like, I'll probably take a trade, and you guys will still be watching, like, 15 minutes later.
Oh, shit.
That would make it hard to trade. Yeah.
Yeah.
I see.
Yeah, so when we're done with this, when we're done with these next chapters, you guys can just go to TradingView and just activate the 30-day trial.
Okay.
And then by that time, we should be trading. And then you guys can, it's super cheap. It's only $12 a month. You know what I mean?
Yeah.
So, but once we are finished doing the paper trading, you guys can cancel the account, because we're going to be trading on a prop firm.
Right.
So it's gonna have the live data already, and you're not gonna need TradingView anymore.
Oh, okay.
So TradingView is only for when you have a live account, or you just want to like practice plotting and shit like that.
Is the other thing similar to TradingView?
Yeah, it's exactly the same.
Oh, okay.
Yeah. So some prop firms have their own charts and shit, but some like the big prop firms, they work with TradingView, so that they're allowed to use their charts. So everything is exactly the same.
Nice.
Yeah, so you're not gonna have to learn any new like ways to use the chart. Because like there's this one prop firm, it's called Alpha Futures. They have their own. They go off of a broker, and the broker has its own platform, so it doesn't use TradingView. So when I was trading on that platform, I was like, yo, how the fuck do you do anything on this shit? Because
Yeah,
they don't give
learn
you
all the tools and everything.
they don't give you no tutorial on how to use the chart at all. So it's like you're looking for you're like spending 3 hours trying to find like where the tools are.
Sounds like another video you're gonna make, Nate.
Nah, because I'm never using that prop firm again, dude. I mean, actually, Alpha Futures is actually an extremely good prop firm. I just don't like. I just don't want to trade on there because it's so hard to use their shit. But they actually made a new platform, so they did the same thing as the one that I'm doing, where they made their own platform and they work with TradingView now. So now I might actually go back.
There you go. It'll make it a little bit easier for you.
Yeah. And it's the rules on Alpha Futures are way easier than they are on Top Step. Because Top Step is like super restrictive. Like they want you to fail so they can make a lot of money.
Damn.
Like Alpha Futures, they want you to fail too, but I think they want you to become a live trader under them more than they want you to fail.
Right.
Because if you make money, they make money.
Yeah.
Top Step, they're just like, nah, fail, pay that shit, dog.
Pay the account, yeah.
Yeah, reset the account, buy more accounts. All right, so that was Candlestick reading. Thank you guys for watching chapter 14. We're going to go into the next chapter. Thank you. If you guys have any comments, remember to comment them down below, ask any questions. Remember to like, subscribe, and turn on your post notifications. And we'll see you guys in the next one. Peace out.